Welcome to Burns Hustles, where we turn side hustles into cars. Have you ever wondered how to make your money work for you? Well, you're not alone. Many people grapple with the concepts of personal finance and investment, yet these are the very tools that could turn the tide, enabling you to manage your financial resources effectively. Understanding them is not just about money, it's about freedom, security, and shaping your financial future. So, are you ready to take the reins? Stay tuned if you're ready to take control of your financial future. To start with, understanding personal finance is key to financial freedom. Diving right in, let's break down the basics of personal finance. First and foremost, there's income. This is the money you're bringing in, whether it's from a job, a side hustle, or investments. Think of it as the fuel for your financial engine. Then, we have expenses. These are all the things you spend your hard-earned money on, from bills and groceries to entertainment and vacations. It's essential to keep track of where your money is going, as this knowledge will empower you to make informed decisions about your spending habits. Now let's talk about savings. This is the portion of your income that you set aside for the future. Whether you're saving for a rainy day, a major purchase, or your retirement, it's crucial to consistently put money into your savings. Consider it as paying your future self. And of course, we cannot forget about debt. This is money you owe, whether it's a student loan, a credit card balance, or a mortgage. While some debt can be a useful tool when managed correctly, it's important to avoid accumulating too much, as it can become a financial burden. These four elements, income, expenses, savings, and debt, form the basis of personal finance. But understanding these components is just the start. It's how you manage them that really matters. This is where budgeting comes in. A budget is a plan for your money, laying out how much you'll spend, save, and pay towards debt each month. It's like a roadmap for your financial journey, helping you navigate towards your goals. And finally, there's financial planning. This involves setting financial goals and creating a plan to achieve them. It's about making your money work for you, not just now, but also in the future. It can involve investing, retirement planning, tax strategies, and more. Remember, a solid understanding of personal finance is the first step towards financial independence. By mastering these basics, you're setting yourself up for a future of financial success. After all, the journey of 1,000 miles begins with a single step. And in this case, that step is understanding the fundamentals of personal finance. Now that we've covered personal finance, let's delve into the world of investing. Imagine you have a tiny seed in your hand. With the right care and environment, this seed can grow into a towering tree, providing shade, bearing fruit, and increasing in value over time. That seed, my friends, is a metaphor for your money, and the growth process represents investing. Investing is essentially about making your money work for you. Instead of letting your hard-earned cash sit idle in a bank account, you put it into financial instruments that have the potential to grow in value over time. In other words, you're trading your money today for more money in the future. There are several ways you can invest your money. Let's start with stocks. When you buy a stock, you're essentially buying a piece of a company. As the company grows and becomes more profitable, so does your investment. It's like owning a slice of a growing pie. Next, we have bonds. When you buy a bond, you're essentially loaning your money to a company or government for a fixed period. In return, they promise to pay you a certain amount of interest each year, and to return the original amount you loaned them at the end of the period. Then there are mutual funds. These are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks and bonds. It's like a potluck dinner where everyone brings a dish to share and everyone gets to enjoy a variety of food. Investing can seem intimidating, but it doesn't have to be. The key is to start small, learn as you go, and remember that investing is a long-term game. It's not about making a quick buck, but about building wealth over time. Remember, investing isn't a luxury reserved for the wealthy elite. Anyone can invest, regardless of their income level. All it takes is a little bit of knowledge, a solid strategy, and the patience to let your investments grow. Investing is not just for the wealthy. Anyone can do it with the right knowledge and strategy. So, how does one start investing? Well, the first step is to set clear financial goals. What do you want to achieve with your investments? Perhaps you're saving for a house, planning for retirement, or you simply want to grow your wealth. Having a clear objective will guide you on the path to investing success. Next, understand your risk tolerance. Investing always carries some level of risk. However, the amount of risk you're comfortable taking on can vary greatly from person to person. Are you a risk taker, willing to potentially lose some money for the chance of higher returns? Or are you more conservative, preferring safer, more predictable investments? Being clear on this will direct your investment choices. Now let's talk about diversification. This is the practice of spreading your investments across various asset classes to reduce risk. Think about it like this. If you put all your eggs in one basket and that basket falls, you lose all your eggs. But if you spread them across several baskets, the loss from any one basket will be less damaging. Diversified portfolios can include stocks, bonds, real estate, and more. Knowledge is power, and this is especially true in investing. Before you invest in anything, do your homework. Research the company, the industry, and the overall market conditions. The more informed you are, the better decisions you can make. Finally, be patient. Investing is not about getting rich quick. It's about building wealth over time. Don't be discouraged if your investments don't skyrocket immediately. Stay the course, and remember, Rome wasn't built in a day. It's also worth noting that there are many sources of investment advice out there, from financial advisors to online resources. Don't be afraid to seek help and advice. Getting started in investing may seem daunting, but with careful planning and informed decisions, it can be a rewarding endeavor. Remember, the journey of 1,000 miles begins with a single step. So, take that step today and embark on your investing journey. Investing can be tricky, and making mistakes is part of the learning process. Now let's dive into some of the common investment mistakes that you should avoid to increase your chances of success. First, not diversifying investments. Putting all your money into one type of investment or one company is like putting all your eggs in one basket. If that one investment goes south, you can lose a significant portion, if not all of your investment. So spread your investments across different types of assets and companies. This strategy can help manage risk and potentially increase your returns. Second, investing in what you don't understand. It's essential to thoroughly research and understand any investment before you put your money into it. Don't just follow the crowd or invest in something because it's trendy. Remember the old saying, "A fool and his money are soon parted." If you don't understand an investment, you're more likely to make poor decisions that could lead to losses. Third, letting your emotions drive your investment decisions. Investing is not a game of luck, but a game of skill and strategy. It's crucial to stay calm and make decisions based on facts, not feelings. If the market is down, don't panic and sell out of fear. Similarly, if the market is up, don't rush to buy out of greed. Stick to your investment plan and make rational decisions. Fourth, not having an investment plan. Without a clear plan, it's easy to lose sight of your goals and make impulsive decisions. Your plan should include your investment goals, risk tolerance, and timeline. It should also outline your strategy for diversifying your portfolio and when and how you will adjust your investments. Lastly, not regularly reviewing and adjusting your investments. The market changes, and so should your investment strategy. Regularly review your portfolio and make adjustments as needed to keep it aligned with your goals and risk tolerance. Avoiding these common mistakes can significantly increase your chances of investment success. So take these lessons to heart and invest wisely. In summary, taking charge of your personal finance and understanding investment are vital steps towards financial independence. We've traveled together on this journey of knowledge, unraveling the mysteries of personal finance, exploring the power of investment, and learning how to navigate this vast financial landscape. Let's revisit some key points. We started with the basics of personal finance, a foundation that underpins every financial decision we make. From budgeting to saving, understanding these principles is crucial. It's about mastering your money, not letting it master you. Then we delved into the world of investing, a powerful tool that can amplify your wealth. We learned that investing isn't about quick riches, but about steady growth over time. It's about patience, discipline, and a keen understanding of risk and reward. We also discussed how to start investing. It doesn't require a mountain of capital, but rather a willingness to learn, adapt, and persevere. Remember, every investor started somewhere, and the most important step is the first one. Lastly, we highlighted common investment mistakes. Understanding these pitfalls can help you navigate your investment journey more smoothly. Avoiding these mistakes isn't just about protecting your capital, it's about ensuring your investments align with your financial goals. Remember, the journey to financial freedom begins with you. Start today and make your money work for you. Start.